Good evening, ladies and gentlemen. Today we will be looking at a public notice that was published by Kenya Revenue Authority on 7th of November 2025. The public notice was specific to income and expense validation in the income tax returns, which is tied down to the 10th Tax Invoice Management System and the Electronic Tax Invoice Management Systems regulations that have been in place for a while. Today, we will be looking at what that means for businesses and taxpayers, what will be the compliance requirements that taxpayers need to take into consideration, and what taxpayers need to do between now and 1st of January 2026 when this requirement becomes effective. With us today, we have a number of speakers from Kenya Revenue Authority and also from the tax consultants, and they will be introducing themselves in a short while. So we have Agnes Gitau, we have Akamba Wangwe, we have Carol Washuka, David Busaule, and we also have Josephine Mugure joining us today as speakers. I will ask them to introduce themselves. But before we go into the speakers, my name is Joe Moniki. And for those who are frequent on Mango X Spaces, we might have interacted with myself moderating these sessions. And what we endeavor to do is to clarify and make any tax and legal regulations that have been published simpler for taxpayers to implement. So we will start with Agnes, then Hakamba, Caroline, David, and Josephine in that order. Agnes?
Good evening, everyone. Thank you, Joe, and a big thank you to Mongo Capital for this opportunity to hold the discussion this evening on expenses. My name is Agnes Gitau. I'm a tax manager at Anderson. And as Joe has mentioned, today we are going to discuss in depth on the effect of the public notice that the KRA published so that we can see where we stand as taxpayers, where we stand as a country, and what is the way forward. So looking forward to a fruitful discussion. And yes, thank you all for joining.
Good evening all. Thank you for joining this call, and thank you, Amango, for organizing this call. My name is Hakamba Wangwe. I'm an employee of Kenya Revenue Authority, and I'm in charge of the Electronic Tax Invoice Management System, ETIMS. And today I'm happy to be here to be able to explain the areas that probably need clarification in the subject that is being explained today, and hopefully help us to be able to comply better and be able to carry on our business better. Thank you.
Hi, everyone. My name is Caroline Washuka. I also work at Kenya Revenue Authority in the eTeams Operations Office, and I'm quite happy to be here with all of you today. I logged in to just engage and have this conversation. Thank you.
Good evening, everyone. My name is David Busaule. Coming from the Business Strategy, Technology and Enterprise Modernization Department, giving the technology information perspective.
Good evening. My name is Josephine Mugure. I am also an employee of KRA. I'm in Policy Division in the MST, that is Micro and Small Taxpayers Department, and I'm glad to be here. Thank you.
Thank you to our speakers for making time to join us today in this session. And to many people joining us today in the audience, I know you are wondering what is this new thing that has been published. Is it a new law? What does it mean to our businesses? And so the first question we will pose to Josephine, who will set a background for our discussion today. Basically, what is the background and the legal framework which teams and e-teams came to operate? And this notice, is it a new regulation? Where is it anchored in the law? Is there a provision to do this validation so that we can set the pace for our discussion? Over to you, Josephine, on the legal framework.
I would like to take us back to when eTIMS began. eTIMS has been here for a while, but we got it properly anchored in the law in 2023. And in 2023, we provided for a system, for the commissioner to use a system. And this is anchored in Section 23A of the Tax Procedures Act. But that law has some exemptions to it. That the exemptions are the items which will not be required to issue an eTIMS invoice for and I'll be reading out those in due course. We also have regulations that were enacted in 2024, and they are called the Tax Procedures Electronic Tax Invoice Regulations 2024. These regulations give the law a bit of meat because we cannot put everything in the law. The law gives it mandate, then the regulations explain a little further. So in the regulations, you'll find the definitions, wider definitions than what you have in the law. You will find the processes, you'll find what is a requirement, it defines an invoice and all that. So that is the background. That law was effective from 2023 when the finance bill came into being. But you remember there was an extension up till around April 2024, the requirement for business people to issue invoices on ATMs. And KRA had pushed it forward to allow us to align our system. And so since the law came in and the system has been amended, we have been continuously improving. And so now KRA is at a point where we need to start using the system fully. We've been bringing in things in bits. By fully, we will require the taxpayers, not just people registered with VAT, to issue ATM invoices. That was the purpose of that law in 2023. And the regulations give us how we will do that. And the public notice that was issued about a week ago, the one that Mango referred to, is explaining to Kenyans that when we are uploading the return for 2025, so assuming that your year ends in December, by the time you file your return for 2025, which will be by June 2026, then when you upload, the system is going to check whether the expenses you have claimed there have been declared on ETIMS. That is, whether the person who sold to you gave you an ETIMS invoice. So those expenses that were bought through ETIMS then will be able to pass as you load your return. If not, then any invoice that you have claimed in your expenses that is not on ETIMS, then the return will not be accepted with those invoices on it. That is basically the meaning of that public notice. And no, it is not a new law because the law already came in, the regulations already came in. Now we are just effecting it as an administrative tool to bring into full blast the ETIMS.
Thank you, Josephine, for that clarification. And one follow-up question to you is, when TIMS and ETIMS was introduced, as you mentioned, effective April 2024, this was mainly to cover VAT, the value-added tax. Now, this public notice issued last week on 7th of November 2025 implies a validation related to income tax returns. Maybe you can tell us how the ETIMS and TIMS requirements have evolved to include income tax obligations.
Traditionally, ETIMS was for VAT, like you rightly said, but it was in 2023, in the Finance Act 2023, that income tax was also anchored in the law. That is, requiring even people who are not registered for VAT to issue ETIMS invoices. So we did away with the requirement to be a registered person for VAT purposes, to bring in everyone who's issuing a business invoice to issue that invoice on ETIMS. So that came in 2023. It is income tax that we brought in 2023. Otherwise, ETIMS had been there, but for VAT purposes. So we are reading on that law now. And pursuant to that law, the one that came in 2023, we did the regulations which were passed by Parliament in late 2024, around November 2024. And so that the introduction to require an ETIMS invoice for every purchase is not coming in with the public notice. It has been there in the law since 2023, just that it is now that we are saying the systems are ready, the law has been around for a while, now we need to start issuing ETIMS invoice for every purchase, which we have been talking about through this time.
Thank you, Josephine. That sets the pace for our discussion this evening. To our audience, I think it's clear why we are having this discussion on TIMS and ETIMS, validation of income and expenses, and how it has evolved from being based on VAT obligations to the requirement to extend that to income tax obligations from 2024. Now, getting into the details of our discussion for tonight, and our first question goes to Agnes. Question is, what will materially change for taxpayers when KRA starts validating income and expenses from January 2026? Agnes?
Or
what will change when the validation process starts? Well, for starters, I'd say with this new validation or with now KRA implementing the law that came in that requires that any expense or loss that has been incurred should be passed through e-teams for it to be considered as a valid business expense. It then means that for anyone who has not validated the expenses for their business, the same will not be allowed to be claimed when it comes to paying their taxes. And if we have to look at how we arrive at the amount of tax to pay, just for context purposes, it's the income. Basically, it's the income of a taxpayer, deduct the expenses they incurred in generating that income, and then multiply the net profit by 30%, the current rate as we have in the legal provisions. So when we say that going forward, the income and expenses will need to be validated, it then means that for anybody who does not validate their income or expense, then the same will not be recognized when we come to filing of our returns and also accounting for the tax due for a taxpayer. So when we talk of validating income, we need to look at it from the aspect of a person's A income is person's B expense. So if person A does not declare their income on e-teams, it means that person B, who actually paid them for them to earn that income, will not have a legitimate expense to claim for their business. And if the expense is not valid, then it means that when they come to calculate their taxes, then they will do less expenses than they should have if they had gotten the validated e-teams expenses from the person they sold to. So what this means that for business people and for taxpayers is that it's somehow the burden of trying to push compliance, or it will be in the best interest of a taxpayer to ensure that whoever they purchase from or the person from whom they incur an expense is validating their invoices and having them generated through e-teams, or rather is declaring their income with the KRA to enable you as a purchaser to be able to claim such an expense. Considering that this is now going to be effective from January 2026, the question is, we are now in November 2025. So when we look at the expenses that one has incurred from January to date, or what about those people who did not make purchases that were e-teams compliant? Then that would mean from a legal perspective and from the KRA's validation point, expenses like those would then not be considered as legitimate business expenses, which would then just place the burden of tax on the person who incurred the expenses.
I believe it's clear on what will be the expectations from taxpayers' side when the validation of income and expenses goes live. So to our audience, I think in our discussion today, we will be looking at instances of invoices that have not been e-teams or teams generated from January to date. What happens to that? Hopefully, we will get a solution. But going forward, it's important to note that you have to make sure that you only purchase from the suppliers who are e-teams or teams compliant. Our next question goes to David. And the question is, why is KRA rolling out the income and expense validation now? We expect that there will be compliance gaps. So really, what is KRA trying to close in at this point, David?
The reason why we are rolling this out now is probably two major reasons. First, as Josephine had alluded to, the Finance Act 2023 had already provided for these legal provisions. So again, it's not really a new provision legally. This change ideally was supposed to have been effected on 1st January 2024. Of course, we had a lot of challenges better part of 2024 as people are onboarding on e-teams, especially the non-VAT component. And as we are looking within our systems, then we realize 2024 probably was not really a good year to do any of these system changes. And of course, KRA was also rolling out much more simplified solutions to just support the public in their compliance with e-teams. So yes, coming fast forward, then we have looked back. We've looked at the solutions available. We've looked at the technology we are currently having, the systems we are currently having. And then this time now becomes the better, it's more of the best time now to roll out some of these validations, which again will, of course, part of the main objective of this validation is to enhance equity, fairness, transparency, enhance visibility of our transactions, enhance tax-based expansion. So there are many objectives around, and of course still enhance the user experience, because some of those people will be relying on our data. They don't have a system. They can be able to know to what extent is their income, to what extent are their expenses. They can be able to claim all the expenses, especially the MSMEs probably who don't keep records, but of course, maybe they insist on having a tax invoice every time. Maybe they make a purchase within the economy. It's cutting across different objectives, but the main ones you can say the change is now to just enhance equity, enhance fairness, transparency, visibility, and of course, compliance for the personal income tax and the company income tax.
We also have to appreciate your efforts in pushing implementation of technology in tax administration, especially on iTax, and the way you've supported many taxpayers to simplify iTax operations and challenges that they may have faced on iTax. Now, when we look at this validation, and it's important to appreciate that the technology is intended to simplify compliance. So when you look at this public notice, and many of our audience joining today, I'm sure would be MSMEs, it's important to practically look at how this validation will look like. So in essence, what does it mean for individuals in business running as a sole proprietorship and also running as businesses or legal entities when filing returns? What does it mean for these people? David?
I'll explain the validation in summary, what our taxpayers expect, especially including the MSMEs who probably are listening in this space. The validation is going to be twofold. First, we are proposing to validate your income against your teams and e-teams invoices, or for those consultants probably who have withholding certificates, then I will be validating it against the gross amount of the withholding certificate. So for income, we'll be taking the higher of your e-teams or team expenses or the gross amount as per the withholding certificates which have been issued and withheld on your behalf by your respective withholders or suppliers whom you've engaged within the year of income or the return period you're filing. So for income, those are the two validations, the higher of your e-teams or team invoices or the gross amount as per your withholding certificates. And of course, also, Joe, it's just good to mention that at this point, we are also aware that we have a unique sectors and unique transactions and unique businesses where probably this validation may not work for everyone. And we're already working towards having an administrative way of how to deal with those adjustments or reconciliations which might arise from those unique transactions. Then now we come to the expenses. As Josie had guided in her opening, and even Agnes also mentioned this, now for expenses, the Income Tax Act under 61, of course, I know people don't like us quoting the act, but this is just for their reading. If they go read section 16(1)(c) of the Income Tax Act, it's very clear that all your business expenses must be supported by an electronic tax invoice, and it could be both purchases and expenses being claimed in the income tax return. And on that, again, we are going to validate it against those e-teams or team invoices which have been issued by your suppliers. And of course, they properly captured your PIN as the PIN of the buyer or the purchaser, and they have transmitted the invoices to carry. So there are quite some steps to be followed by both suppliers and buyers, which ideally should be happening. But of course, probably some may need now to start transmitting some of the invoices they issue to their customers within the year 2025. So that purchase or expense can be available to their customers when they come to file their income tax return and claim the expenses. But again, it's good to mention that, and Josephine had said she'll mention it later, but it's also good just to mention that not all business expenses have to be supported by an electronic tax invoice, and the regulations and even the Tax Procedures Act 23A has provided that certain expenses, I'll just mention the common ones, imports like emoluments, basically those are the salaries and wages expenses, things to do with interest from on loans, things to do with fees charged by financial institutions, expenses relating to airline ticketing, investment allowances, probably they mostly know it as depreciation or wear and tear. So all those others mentioned within that legal provision, you will not need to have an e-teams invoice to support those expenses. So the system will be able to separate the two type of expenses, the ones which are exemptions or exclusions to the requirements of an electronic tax invoice, and the ones which must be supported by an electronic tax invoice. And the system will be able to guide taxpayers accordingly in case probably there are discrepancies between the income they're declaring in the return vis-a-vis the base which KRA is using, and also probably the expenses they are claiming in the return vis-a-vis the base which KRA is using as per the rules we'll have put in this.
Thank you, David, for that elaborate response. we may be getting back to you as we look at how practical this validation will be, so that we can look at some of the challenges that taxpayers have experienced in terms of linking teams and e-teams to iTax, and also linking imports through ICMS to iTax. So we'll be getting back to you to look at some of those challenges and how KRA anticipates to resolve them. But then we change gears a bit. We look at the impact of this validation to MSMEs and the informal traders. And the question to Hakamba is, how will KRA ensure that SMEs and informal traders are not burdened by these new compliance rules? Hakamba.
We have to emphasize once again, these are not new compliance rules. First of all, just starting from the premise of the environment within which we are operating. And we know we are out here as SMEs or MSMEs doing business, or even larger business entities, doing business with each other, you're exchanging supplies, you are maintaining records of your transactions. Within the same ecosystem, as you do business with each other, then the government is also providing an enabling environment as a service to make sure that also that you're able to do your business seamlessly. But then you remember that this government service has to be supported by taxes. That's where the tax authority comes in. And the tax authority says that whenever you are conducting business and you need to maintain a record of your transactions, then we are advancing to the level where the rest of the world has moved globally, the use of technology, because also technology has advanced, so that we move away from the manual environment we've been operating in. And I'm very sure that the biggest concern or the biggest fear is that largely the informal sector is operating from a manual environment. But then here we are trying to align to advancement to technology. Kenya has done so well when it comes to the use of technology in various aspects, especially in the financial transactions, the environment within which the businesses are operating. So we have taken advantage of this environment within which the businesses are operating in them, likely using their mobile phones, they're using computers, they're using laptops, and they're having solutions which they're using to be able to conduct their businesses more efficiently. So for the taxman not to be left behind, what KRA has done is that they have looked for, and we'll be able to talk about them more, but they've also provided those solutions within the taxpayer's own environment to be able to make sure that this taxpayer can actually account for their transactions basically more seamlessly, to maintain digital records, so that now the time has come. We have discovered now that we have the data available in our systems, and to further advance in the use of technology, we slowly move away from the more manual validations that we were doing through compliance and audit, and we use a data-driven approach to this. So basically, it's just to make the whole process, including for our taxpayers, more efficient, so that they reserve more time to be able to go back to their businesses and conduct their businesses more efficiently. To support this also, we have given the legal framework that is more broad-based, that it is not only taking care of our traditional, let's say, VAT registered taxpayers, but we also have clauses that are actually supporting our smallest of our taxpayers, that's the SMEs, to make sure that they can be within reach when it comes to compliance. So basically, those are the measures that have been put in place. Just to emphasize, there's nothing new. Business continues as usual. Issuing receipts continues as usual, except we are saying that now we need to automate it.
Thank you, Kampa, for that response. I believe it's comprehensive enough. However, personally, in my interactions with people operating in the informal sector, I've received a number of requests to assist them to onboard to e-teams and the teams. And these are people operating on a small scale basis. So the question is, how easy is it to comply with this e-teams requirement? How easy is it for a border rider to onboard his business on e-teams and be able to provide that when required by a customer, so that, we are able to simplify this legal requirement to the lowest level possible?
What again we've taken time to do over the past 2 years, from 2023-2024, is to make sure, as I mentioned earlier, we've explored the solutions that are available out there. What are our taxpayers, including the smallest, using? And we realized that, yes, most of our solutions probably required smartphones to use the mobile apps to generate invoices. So we've simplified to the extent that even if you do not have a smartphone, through USSD, and this is a solution largely being used by the biggest proportion of our taxpayers, if you're able to do *222#, then you can easily follow the prompts from KRA services and be able to generate a tax invoice for yourself. But then we also have factored in the fact that there are some who still may have a challenge with going through the prompts from the USSD solution. And that's why we have what we are calling the buyer-initiated solution. It's something that people have talked about so much, but that's the reason why it is there. And that is the reason why Section 23A, I know we don't want to go to the act so much, as we require taxpayers with business income to be able to use e-teams to generate invoices. We also recognize we have the smallest, and we have said that if you're below 5 million turnover, then the person who you are doing business with, that is the buyer, he has been empowered to generate an invoice on your behalf. You are not able to, but someone else is able to. And they need also, I think maybe what is important to clarify is that the reason why they will need to generate the invoice for you is because for them to be able to comply fully to tax requirements, they not only need to onboard e-teams themselves and issue tax invoices, but then when they're filing their return, they need to support their expenses with electronic tax invoices. And they have also said they don't want to stop doing business with you. So the boda riders, the mamambogas, if you're supplying your vegetables to a hospital, a school, or a restaurant, they're saying that they would like to still continue doing business with you, but then they also need to fully comply to tax requirements. So they're able to generate the invoice on your behalf. The only thing that you'll be required is to acknowledge that transaction actually happened. Again, the bottom line, accurate tax declarations. So there's the dependency to make sure that even smaller businesses comply, but there's also a dependency to ensure that there's inclusivity when we are doing business. We don't leave anyone out and cut them off just because they're having challenges to comply.
Thank you, Hakamba, for elaborating that you have simplified the e-team compliance to the level of USSD. But then to taxpayers, some taxpayers will tell you, yes, you have simplified to that extent, but I do not even know my KRA PIN. So is there a simplified way a taxpayer can just, in a similar way, use USSD to be able to get confirmation what their KRA PIN is, or any other avenue that is available? Okamba.
Yes, actually, just going back to the *222#, the listeners can actually go to that right now. If you access the KRA services, apart from e-teams, which I've talked about quite a bit, then you'll be able to see the other KRA services that are available. And part of it is if you'd like to retrieve your own PIN, then their prompts, again, the basic is that you need to know your ID number, and you'll be able to retrieve your PIN for purposes of basically moving on and be able to use it for various transactions. But you can also make payments. You can file your turnover tax return. Again, a big part of MSMEs, so that we have these really simplified solutions that have fewer steps that make it very easy for our smallest of our taxpayers to be able to comply once they access these services.
I believe that is clear enough to our audience. You can access KRA services through a *222# and be able to as well do the basic requests like retrieving your KRA PIN. I believe KRA officers joining us today, you need to take note that this information is not readily available to most of the taxpayers, and it's important that you publicize it for far reach within the taxpayers. Now we move on to Caroline, and the question is, I am a taxpayer and I have some expenses from suppliers who are Teams compliant. So now what will happen when this validation goes live? I have received or have purchased services, goods from a supplier who was not Teams compliant between January to October 2025. What happens to those expenses?
I know that is a real issue that a number of the MSMEs may be facing and wondering what to do. And this is actually why we are taking advantage of such forums to be able to just come in and give the required guidance, and for us to also get feedback from you as our taxpayers. So for cases where over the year 2025, we are now in November with just a month to go before the year ends. And when it comes to filing your income tax return, you actually don't have to wait until June to be involved in that whole rush to file your return. You can actually file your return as early as January. So you have the window between January and June of every year to file your income tax return so that you avoid the last minute rush on June 30th. So come January next year, what you would need to ensure you have in place for any purchase that you made, because for you, these are purchases we are talking about. You're running your business, and I'll give the example of a restaurant, because a restaurant, these are people who just to prepare their meals, they source the ingredients either from supermarkets. If it's supermarket, then you have no problem because you are getting your invoice. However, if you did go to a supermarket, made the purchase for now, the vegetables and fruits and whatever it is you use to run your business at the restaurant, the expectation is that because this is a business expense, that with every time you are making a purchase, you would provide your PIN so that the supermarket is able to capture your PIN on the receipt. And again, I'll clarify, the PIN is usually not captured at the till, at the cashier till. So they will just bill you for whatever you have in your cart, in your shopping basket, and then you will always be referred to the customer care desk so that now they can issue you the invoice captured with your PIN. In the event that did not happen and you made a purchase from a supermarket, kindly go back to them, and you have every right to request them to issue you with the invoice with your PIN captured. They would have to do a credit note for whatever invoice or receipt that, and this would actually mean that you have copies of those receipts that they can be able to refer to do the credit note, and then reverse the receipt they had given you and issue you a new one with your PIN captured. So that is okay for the formal businesses. They can be able to facilitate you. But if you are getting your supplies from Mama Boga here and there, since you are running a business, we can say that your suppliers are people, you would be going back to the same people over and over to get the vegetables, the fruits. So if they did not issue you with invoices, you can just go back to them and inform them that for you, now you do require an eTIMS invoice to support all the purchases you made from them for the year. And you should be able, even for any, they did not give you the receipts, but you can be able to estimate from this Mama Boga, I buy tomatoes from you every week, or let's say of 1,000 shillings every week. So we are at how many weeks in the year? You calculate that and then do the total in terms of how much have you purchased in total from this Mama Boga. And then you can ask them to do the eTIMS invoice for you. And we have mentioned that they can do this even through USSD. In the event that even that is a challenge, then what Hakamba had mentioned about buyer-initiated invoicing is what can come in to save the day, where you now as the buyer, and that's why we refer to it as buyer-initiated, you can actually raise that invoice on behalf of this Mama Boga who you have been doing business with for the year. So because for this year we are trying to mitigate or correct past mistakes, I think the only way out would be to accumulate the total of what you have purchased so far. And of course, you would be required to have a way to back it up, even with this Mama Boga, assuming that it's clear how much you pay them every time you make a purchase, so that they are in agreement that if it's 1,000 over a period of, let's say, 52 weeks for the entire year, then they are raising you a total invoice of 52,000. And that now is what you can be able to do on their behalf through buyer-initiated invoicing. So this process of buyer-initiated invoicing is available through eCitizen. If you go to ecitizen.kra.go.ke, the functionality is there. It's a very straightforward process. You log into eCitizen with your credentials, the way you normally log in to renew your driving license or passport or whatever it is, business permit, same credentials. Then you would go to the buyer-initiated module or menu within eTIMS on the eCitizen portal and provide the details of this seller. And the information that you put in is ID number, mobile number, description of what they have supplied. Let's say it's tomatoes, what was the unit price, let's say quantity, or you can provide that information of unit price and quantity so that you get the cumulative value for this entire period that you have been transacting with the mama mboga and they have not given you an invoice. Why you're providing their mobile number is so that they receive an alert when you submit. They will receive an alert that, let's say it's Caroline has raised an invoice of 52,000 on your behalf. So they'll be guided to access *222# to approve the invoice. And once they approve it, you also get an alert to inform you that so-and-so has approved the invoice that you raised on their behalf. And you get a link on that same text message that you're able to click on, and you now have the invoice with you, accessible through your phone. So that is what we would encourage you to do for now to address this issue that has happened for the year of 2025. Ideally, you should have been getting an invoice, eTeams invoice, for every time you made a purchase. But because what has happened, in case you do need to correct the issue, that is the guidance we can give. But going forward, kindly just ensure that for every purchase, you get an eTeams invoice. And if the person you are doing business with is not able to, they don't know how to go about it, you can do it on their behalf. And of course, they would need to approve it because it is something you are doing on their behalf. So there is full transparency and it's all in the open. Both parties, you as the buyer and the mama mboga as the seller, you are all aware. I hope that provides clarity.
Thank you, Caroline. And as you've elaborated on the buyer-initiated invoicing to ensure its compliance, I believe it's not an area that many taxpayers have interacted with. And I believe the expectation is that as we look forward to higher numbers in terms of compliance, KRA should pass on this message with enough simplicity so that any taxpayer can figure out, how do I go about this buyer-initiated invoicing? And the way you can do that is to publish a stepwise guideline on how to go about it, or you can also do a simplified YouTube videos that can guide the taxpayers to go about this buyer-initiated invoicing.
So if you'll allow, I will post the user guide on the buyer-initiated process. I can provide a link there, accessible from the KRA website. We have a lot of information there on eTeams, including how to go about the buyer-initiated invoicing.
Before we move on, maybe you can just clarify to our taxpayers joining us today, how does a compliant Teams or eTeams invoice look like? What do I expect to see when a seller tells me that they have issued a compliant Teams invoice? Caroline?
It is very easy to verify and confirm that you have been given an eTeams invoice. So just by the look of the receipt or the invoice, all eTeams invoices are standard in terms of the information that is captured. So we have provided for a way that you can be able to confirm whether that invoice you have been given or that receipt you have been given is valid or genuine, to even allow you to support that purchase you have made as a business expense. So all eTeams invoices, and this includes the ones issued from the ETR, all ETR receipts and eTeams invoices have a QR code on them. So without even going into too much detail, the QR code is one way to confirm. And don't just rely on, okay, the receipt has a QR code, I'm satisfied. Please go a step further to scan that QR code to confirm that it is a genuine receipt. The genuine receipts, the ones that have been issued to you and transmitted to KRA, will give you a report, a summarized report of the details of that invoice. And those details include invoice date, the total amount of the invoice, the seller, the person who has sold to you, where you have provided your PIN, because we are again emphasizing, if it's a business expense, a purchase to support your business operations, ensure you provide your PIN at the time of the receipt being generated. And most business premises you'll find, like even just today, I passed by Textbook Center, they have those notices at the cashier counter. They've put up a paper, printed out something, informing their customers that if you would want your PIN captured on the receipt, ensure to inform the cashier before that receipt is printed out. Because once it's printed, yes, they can do a credit note, but it might be a bit of a complicated process for them. So to avoid all that, we encourage you to provide your PIN. And when you scan the receipt, you'll see your name featuring on that receipt. That is a confirmation that your PIN was captured, the receipt transmitted to KRA, and for that invoice and that receipt, you can be able to claim it as a business expense. The other details, of course, are what we are familiar with, what is standard that should appear on a receipt. There is also a unique invoice number generated for each invoice. We call it a control unit invoice number. It appears on all e-teams, invoices, and ETR receipts. If you're not able to scan the receipt, if you don't have a smartphone, then you can type in that control unit invoice number on the iTax page. We have an invoice checker, and that will still give you the summary of the invoice to confirm it is valid. If you do scan and get a message, invalid invoice, or something like that, it doesn't mean that invoice is fake. It could be that it has not yet been transmitted. There are those who do real-time transmission. As they give you the receipt, it has transmitted immediately. And you'll notice most supermarkets, the big ones anyway, do real-time. When you scan the receipt, even as you're waiting to leave the supermarket, you'll find it has already transmitted. But there are those who prefer to transmit all their invoices at the end of the day. So even if you get your receipt, you scan it, it doesn't give you a positive response, don't attack the shop owner at that point telling them you're giving me a fake receipt. That's not the case. Carry that receipt home with you. Do the scan again at the end of the day. And if the following day you still find that receipt is not giving you a positive response, you have every right to go back to that shop and tell them that I actually require a valid invoice or a valid receipt. And for any instances where you are not being supported or they are not cooperating, we have provided ways by which you can reach out to KRA for us to just take it up. Because now you cannot do the work of KRA and start enforcing and asking this person, you must transmit. That is what we are here for. And that kind of information, once shared with us, we will be able to follow up on your behalf.
The next question goes to Agnes. And really, we are looking at, with all this information now provided from KRA, are there expenses that are exempt from complying with e-teams? And how will that be captured on iTax practically? Do taxpayers expect to have technical itches or when declaring those expenses? And maybe David can weigh in after Agnes on any technical issues that may arise on declaration of these exempt expenses from e-teams compliance. Agnes.
Oh, yes, there are exemptions to expenses that require e-teams. One of them being emoluments. And under emoluments, we then cover salaries, wages, commissions, remuneration given to your employees for the service that they offer to you as an employer. So for that, e-teams will not be required, but then you should ask yourself, how will the KRA know that you declared the right amount? Or how will KRA then validate that the expense you're claiming here as salaries and wages for your business is legitimate? So for emoluments, the KRA would then try to tie that amount with the pay as you earn that you paid. Remember, from your iTax record, the KRA can be able to track how much pay as you earn you've paid on behalf of your employees. And that can also guide to tie the salaries and wages expense to, just to verify whether it's a legitimate expense incurred by your business. And now this means that as a business person, your records should be very clear. And especially if we come to things like wages, whereby you probably are dealing with people whose salaries are less than 24,000 per month, probably some non-permanent staff who are probably not on your payroll. So it's very important that proper and clear records are kept just to support the expense that you have as salaries and wages in your financial data. Another exempt item is imports. And for this, then the taxes can easily be tracked at the port. The customs duty you pay, the VAT you pay, and the forms that you seal at the port can be used to support such expenses or to legitimize or to test the legitimacy of the expenses that you declare as import. Another item is investment allowances or capital deductions. And this now comes in for assets. Let's say you have motor vehicles or buildings. So considering that this is diminution of assets or diminution of property, e-teams will not be required here. But then that means you'll be required to follow the rules of wear and tear, the rules of capital deduction, as provided for in the Income Tax Act. Airline passenger ticketing is also exempt from ETINs. Interest expense that you pay on loans is exempt from ETINs as well. And other fees that are incurred by banks or insurance and reinsurance companies. Recently, we've also had a provision for withholding tax, and especially if the withholding tax paid is a final fee. And now the test for KRA in this would be just for them to see the legitimacy of the expense, and they can be able to easily tie it back to the withholding tax rate that was withheld when payment was made to you. David?
I think you've explained just from the technology side and how the return will look out. It will require our taxpayers to declare those exemptions under unique field, which are already there in the return, but new ones will be provided in the return in the profit and loss section of the income tax returns, whether it's the income tax company return, the income tax partnership return, the income tax resident or non-resident, as long as you're declaring business income. So there'll be unique fields to capture the exclusions or the exemption. And of course, now any other expense within the return will now have to be validated against your team for eating. So that's from a slightly just addition on the look and feel of the return come 1st January.
Thank you, David, for that clarification. Follow-up questions on some challenges that as a tax practitioner I have experienced in terms of enforcing compliance from my suppliers. And one of the challenges, and Caroline tried to allude to that, was in terms of transmission. Delays in transmission of teams and e-teams invoices is real. So you get an invoice that, as Caroline outlined, has all the features to make it a valid Teams or e-Teams invoice. However, you find that the information on that Teams invoice especially was not transmitted to ITAT. So we will expect to experience that challenge when we are filing these 2025 returns and declaring some of these expenses. It's valid that a taxpayer will have, by all means and standards, an invoice that looks like Teams compliant, but then iTax will or may automatically deem that the information in that invoice was not transmitted. 1. 2. Another challenge that I've personally experienced is valid imports that duty has been paid upon through the customs system, that is ICMS. However, when a taxpayer goes to file VAT returns and tries to claim import VAT on those imports, you get an error message that the VAT you're trying to declare on that import is not valid. How does KRA anticipate to resolve these two major challenges in terms of implementing e-Teams on iTax? David?
We apologize also for some of those challenges you and others have gone through. On the aspect of delayed invoice transmission, the way things and ETIF work, as long as you've been issued with an invoice, let's say between 1st January and 31st December 2025, even if your supplier, let's say, delays to 30th March, still the system will still treat it as a 35 invoice. So, and of course, as guided by Caroline, we just need to probably notify your supplier that you issued me with this invoice. I've not, probably after 24 hours, I've checked the invoice checker. It's not transmitting. And of course, now it has not been transmitted. And now probably the transmission needs to happen so that the invoice can be available for your income tax return. But again, even at KRA, they are being proactive on this issue. The same way we delivered the dashboard for the VAT registered taxpayers from June 2025, where all VAT registered taxpayers can now, when they log into iTax, they will see a dashboard where they can be able to track their invoices on a daily basis, their purchases on a daily basis, their sales on a daily basis, their imports on a daily basis, their credit notes for both sales and purchases on a daily basis. And that is the visibility and transparency we are currently working with to provide that visibility to all taxpayers, that at some point before the end of this year, or even probably in the next few weeks, we are targeting to have that dashboard available to the non-VAT registered taxpayers, or basically all taxpayers, and have a way which they can now have visibility of their annual sales, because the other one was monthly, the one for VAT, but you're working on having visibility of annual sales probably from January to November, and of course the purchases and all other transactions, including the imports, And you can now start taking also corrective action around that issue of delayed transmission of invoices, whether it's your sales or whether it is your purchases, and of course, take advantage of that. On the other aspect, our public notice, because the yearly visibility, especially for the non-VAT, the people who are not registered for VAT, is not yet ready. The public notice also guided the taxpayers that they can request for the schedules of their annual sales and purchases from the nearest KRA office or from the account managers, because most of the people who are in business, they are mapped on account manager, and they can be able to be provided with some of these information so that they can start cross-checking and reconciling with the sales as per the accounting system or the sales as per their manual, whichever, whether you have a system or not, but you can at least start some small reconciliation, and you can be able to know what purchases or expenses are yet not available in KRA under your account, and probably follow up with some of those suppliers, and also maybe take corrective action against probably some of the sales. Maybe you have duplicated sales, you've issued erroneous invoices, probably you had forgotten to issue credit notes maybe to some of the goods returned by some of your customers. At least that conversation can start happening before the end. Quickly on the aspect of imports, we are currently integrated with our customs business system, which is the ICMS, the Integrated Customs Management System, for the import side of our things. We have that data in iTax. The common reasons to why some of these imports might be missing, on very few reasons. Commonly, the main reason is the goods could have been released from the port or from wherever you are getting them, but the status in the system may not have been updated accordingly, because for you to be able to claim an import, the status of the import entry must be settled or removed in ICMS. And I think that has become one of the major points of probably divergence, that clients always think that if they take possession of the goods, it means the status of their entry in the system has already been updated. Of course, that's more of a KRA internal issue, and we'll continue talking to our customs team that they should be able to update these statuses of these entries almost real time when the goods are being released, so that no one loses out on a delayed claiming of input. The other possible reason could be, once in a while, we've had a few system challenges, let's be honest, but there have been very few times that it's just a transmission issue between ICMS system and iTax, where we are reading those entries. But we're always doing a lot of monitoring, and every time we realize that, we always take corrective action and avail. For any other of the unique scenarios, those ones we probably will deal with them on a case-by-case basis. We have some unique scenarios in ICMS where probably you only make payments relating to a post-clearance audit, but there is no entry, and maybe there are some aspects of duty remission scheme. We have some other unique scenarios on the custom side where probably the integration currently is not supporting. But for those scenarios, once you engage the customs team, we always support these people on a case-by-case basis. So I think for that, you can always engage accordingly depending on the scenario. But also on our end, we are proactive to ensure that all available expenses, all available imports are available to all our taxpayers for whichever returns they are filing at any one point.
It's actually been slightly beyond 1 hour into this discussion, and I believe we should be wrapping up our discussion for tonight. But I've seen a lot of questions coming from the audience, and we'll try to pick on a few of them. The ones that we may not address in our today's session, the KRA experts joining us today will be providing responses to each one of them. But then a question to Akamba, who has been at the forefront of rolling out iTax, I believe since 2021 and 22. Maybe you can elaborate for us and to the taxpayers, what is the envisioned future of tax digitization at KRA, and what benefit do taxpayers expect to derive going forward by this digitization, mainly based on iTax? When we look at this validation, should taxpayers expect that other KRA processes like tax refund will be equally processed seamlessly when you look at full digitization? Akamba.
Basically, the future that we are looking at is the journey that we have already started. So we've started by having the business systems in place. We've started by having to make sure that the transactions that are going into the business systems are actually digital. You're using technology to have those transactions in. And so we are actually pacing towards more efficient service deliveries, because when we have the systems in place, then we are looking at then what next. we're looking at a more empowered taxpayer who basically, with the technology that has been deployed all around for revenue administration, then they can be able to have better service delivery. They can be able to have the information that they need to be able to comply. We have efficient processes, and tax refunds is one of it. And frankly, I'm going to say that there's progress to this extent, because even with tax refunds, the verifications now are actually heading towards data-driven. We have started the data-driven verification, of course, depending on how long a taxpayer has been on board e-Teams. And that's why it's important also for our taxpayers here or the listeners to know that the more digital you yourself are, then the faster it's going to be to turn around your tax refund, to be able to verify it so that the funds that you need are actually available to you. So it's going to be, again, to depend between you and ourselves, that we have the systems in place, we have the data-driven mechanisms, but we need the data to be able to do that. And that will also depend on you. We are looking at, I think in the very near future, we are going to have our chatbot, our app. Currently, it's under test and it's very soon going to be deployed, so that for whatever it is that you want to query, any information that you need for tax purposes to be able to comply better, then you should be able to do that. All this to make sure that we have enabled you. We have made it easier for you to be able to comply. And in return, we have visibility of your transactions and also expand the tax base. We've had David mention time and again the need for us to have a fair operating business environment. And that will come only if we expand the tax base so that everyone pays their fair share of taxes.
And looking through the questions from the audience, one key question is regarding this public notice seems to be specific to income tax returns declared for the year of income 2025, and you can confirm that for us, David. Now, what happens to taxpayers who have not filed their 2024, 2023 returns, 2022 and backwards? Will these returns, when being filed from 1st of January 2026, also go through similar validation? David?
Looking at the steps KRA has done to just ensure our electronic invoicing solutions are available and other interventions, this system validation will only apply for the 2025 returns being filed after 1st January 2026. Meaning, if someone had not filed the 2022 return, they will not be subject to the rules we are going to apply on the 2025, and it will apply even up to the 2024 return. And the reason we are doing this is that we are also aware that it took some time for compliance of e-Teams and businesses to just get used to doing electronic invoicing, understanding the requirements around electronic tax invoicing. And even we only rolled the VAT pre-filled return from around the end of last year. So yes, for the 2024 return, you'll file it. Normally, there will be no system validations. 2024 and prior, no system validation. System validations will only apply for the 2025 return going forward, because we believe 2025 return going forward, taxpayers are at a better place of complying with the electronic tax invoicing regulation.
To our audience, allow us to take the very final question, but it's given our commitment that we will look into all the questions that you've raised in the comment section and get responses to each one of them. And the final question will go to Josephine. And when we look at all these challenges that taxpayers may experience, it's good to appreciate that it is possible that some taxpayers may experience some invalidation of their genuine expenses. And that means these taxpayers will end up with a tax payable that they had not envisioned. Over and above that principal tax payable, there will be penalties and interest that may arise. Now, recently, I believe there was some legislation regarding waivers on penalties and interest that may arise from a failure by electronic invoicing system. A question to you, Josephine, maybe you can elaborate to our audience how these waivers will be applied and how taxpayers can take advantage of that should they find themselves in that situation.
The one thing I would like to say is Caroline had explained that in the invoices KRA will help you where you feel that it's a genuine expense and you're not able to get an invoice. And because it's a system thing, it's either there or not there. But in the event that true you purchased something and an e-Teams invoice was issued, but it's not appearing, then, and KRA cannot intervene such that there is a penalty at the end of it, the taxpayer has a right to apply for a waiver. And with regard to the recent amendment, you say that there is a requirement that an error arising from system malfunction is waived. Then we have internal processes for how to deal with this. There are errors that require the commissioner to get permission from the National Treasury to proceed, and there are errors that do not require that. So we have classified for our departments which errors are which. And so the taxpayer, where there is a genuine need for waiver, remember, the tax laws are supposed to be fair. So you're not supposed to pay a penny more or a penny less. And in the event that this penalty is making you pay more than you should pay, then you have a case for waiver. And you'll apply the normal way for applying for waiver, and then KRA will process. If there is need for KRA to get the permission from the CS following the recent amendment in the Finance Act 2025, then KRA will do that. It will not involve the taxpayer. So we are here to facilitate the taxpayers, and we will not push the burden of them then to go to the CS, but we will do it on the background and grant them the waiver that they need. The procedure for applying for waiver is using the system. That hasn't changed. So in the event that there's a waiver to be applied for, it is just the normal process that we usually do. Because that other step for requiring permission, then it's for the commissioner to do and not for the taxpayer. I hope that clarifies your question, Joe.
Thank you, Josephine. Indeed, that clarifies and simplifies the avenues of taking advantage of these waivers in terms of the administrative work that the taxpayers may have needed to put in place. Ladies and gentlemen, this brings us to the end of our Mango X Species discussion this evening. But before we sign out, I will allow two of our speakers to give us their parting short remarks, and allow me to request Agnes, with a tax consultant, to give us a closing remarks, and then Caroline will close for us. Thank you.
Thank you, Joe. A big thanks to Mango Capital. Thank you to our listeners for joining in this evening. Mine is to encourage all of us, even as we continue to change into the digital space as a country, as a revenue authority. Let us stand together. For KRA, kindly listen to us as your taxpayers and work on the systems as you have been doing. We do appreciate your efforts, and we believe we can get to an even better place. And for my fellow taxpayers, let us adapt to the change. Remember, it's not the strongest of the species or the most intelligent that survives, but the one that adapts to change. So thank you so much, and have a lovely evening.
For me, it's just to appreciate all of you for making the time this evening to be here, to have this discussion and this very insightful conversation. As KRA, we are really focused on simplifying tax processes as much as possible. And that's why even for the star 222 hash, I hope even after we end this session, you can just navigate through it. Star 222 hash, go to option 5 where we have KRA services. And even if you haven't onboarded eTeams and need to, it's a very quick process, the eTeams onboarding through USSD. And the other services available there, including PIN retrieval, also knowing where your tax station is, all that is available there. So that is all in the theme of simplification of tax processes, making it convenient and easy for you. And also, we are focusing on customer-centric service delivery. We want to engage more with our taxpayers, come to you so that we hear from you. Our management, even at board level, very high levels, the chairman of KRA board engages with taxpayers on a monthly basis through citizen barazas. So we really want to come down to where we can be able to engage, have talks, have discussions to improve our processes and see how to meet your needs. So I just want to appreciate you all again. Thank you, Mwango, for organizing for this session, and I wish you all a good night. Thank you.
Thank you, Agnes and Caroline, for your parting shot. I believe it has been an insightful discussion this evening. And to our listeners, thank you for tuning in and staying to the very end. For any specific questions that we may not have responded to, the KRA staff joining us and any other tax specialists will be addressing them one by one in the next few days. So with that, we can bring it to a close. Thank you very much and have a good evening.